Hey guys, this is Dawson Discussions, and my name is Nathan L. Dawson Jr. Today's date is April 18th, 2020. In this episode, I will be talking about the basics of banking, the history of black owned banks, and how I think having a bank or credit union can help build black wealth in the United States of America. So stay tuned. So, our relationship with banks in the United States of America goes all the way back to the Freeman Savings and Trust Company, which was formerly, it was also known as the Freeman Savings Bank. It was a private savings bank chartered by the U.S. Congress on March 3rd, 1865, to collect deposits from newly emancipated communities. Within 7 years of its formation, the bank had opened 37 branches across 17 states and in the District of Columbia, or Washington, D.C., and collected funds from over 67,000 depositors. At the height of its success, the Freeman Savings Bank held assets worth more than $3.7 million in 1872 dollars, which probably translates to approximately $80 million in 2021. However, the rapid development of the bank was largely driven by false claims and was coupled with mismanagement and fraud. The bank failed in 1874, and a contributing factor to this was speculative loans issued by the bank white officials throughout its existence. There is a consensus among historians that the bank's failure not only affected the savings of many African Americans, but also their trust in financial institutions. Against a backdrop of racist practice in the banking industry, including denial of access, um, black owned banks still arose to help disenfranchise black Americans. In 1888, the Capital Savings Bank of Washington, D.C. became the first black bank to open, and the Savings Bank of the Grand Fountain United Order of True Reformers in Richmond, Virginia, became the first chartered black owned bank in the United States, later opening in 1889. And then over time, more black owned banks follow, such as the largest black owned bank, One United Bank. So, the Federal Reserve System, also known as the Federal Reserve or just simply the Fed, is the central banking system of the United States of America. It was created on December 23rd, 1913, with the enactment of the Federal Reserve Act of 1913. After a series of financial panics, particularly the Panic of 1907, led to the desire for central control of the monetary system in order to alleviate financial relief for the U.S. economy. So the U.S. Congress established three key objectives for monetary policy in the Federal Reserve Act. One is to maximize employment, two is to stabilize the prices, and three is moderating long-term interest rates. So the first two objectives are sometimes referred to as the Federal Reserve's dual mandate. Its duties have expanded over the years and currently also includes supervising and regulating banks, maintaining the stability of the financial system, and providing financial services to depository institutions, also the U.S. government, and foreign official institutions. So the Federal Reserve System has faced various criticisms since its inception in 1913. The prominent criticism include a lack of transparency, double of efficacy due to what is seen by some as poor historical performance, and the traditionalists concerned about the displacement of the value of the U.S. dollar. So, according to the very same Federal Reserve System that I just mentioned earlier, in 2019, 60% of adults in 2019 did not have a checking account, savings account, or a money market savings account. And these people are called the unbanked. Half of the unbanked adults use some form of alternative financial service during 2019, such as using a money order, check cashing service, pawn shop loans, auto title loans, payday loans, paycheck advance, or tax refund advances. In addition, 16% of adults were underbanked, which means that they did have a bank account, but also used an alternative financial service product, such as money orders, check cashing services, and payday loans, rather than on traditional loans and credit cards to manage their finances and fund their purchases. Um, the very same study said that 14% of black people are unbanked, 32% of black people are underbanked, and 54% of black people are fully banked, as compared to 3% whites are underbanked, 11% of whites are underbanked, and 80% of whites are fully banked. So essentially, banks are usually held to keep your cash on hold. So cash is anything recognized by law as a means to settle a public or private debt or meet a financial obligation, as in paying a wage to a employee or a contractor, or to pay a legal fine, and etc. So cash is very important because it provides individuals and families and organizations like businesses with liquidity, which means that you're able to pay off your obligations on time even if the bad times hit. And almost all of our paychecks are paid in a form of cash. So we all need a place to deposit our paychecks with access, um, to have access to our paychecks in order to pay for goods and services. So according to a U.S. consumer payment study in 2016, mobile payments are growing and are now in the hundreds of millions. These types of payments are not possible without financial institutions like banks and credit unions. Anyone who receives a paycheck will probably have a need for banking and financial services. So, one of the first things new employees or parents and guardians of people under 18 who want their dependent to start off on a right financial path is they must make the decision um, to select a bank or credit union for their direct deposit for their paycheck, or at least if the parent or guardian actually have cash and then they actually want to put the cash into a checking account for their minor or their ward that they're actually looking after. So it also brings into question, what is the difference between a bank and a credit union? Okay, starting with a bank. A commercial bank is a financial institution which accepts deposits from the public and gives loans for the purposes of consumption and investments to make profit, which is owned by their shareholders. But because of their for-profit status, interest rates on loans tend to be higher, and interest rates on savings accounts tend to be lower. They also offer many financial services too. So example of commercial banks would be Wells Fargo, Bank of America, JP Morgan, and One United Bank, which is the largest black-owned bank in the United States of America. The counterpart to a bank is a credit union. A credit union is a type of financial institution that is very similar to a commercial bank, but instead it is actually member-owned financial cooperative controlled by its members and operated on a not-for-profit basis. So membership is generally restricted to a certain demographic. Credit unions generally provide services to members similar to retail banks, including deposit accounts, provision of credit, and other financial services. But because of their nonprofit status, interest rates on loans tend to be lower, and interest rates on savings accounts tend to be much higher. Well, not that high, but higher than commercial banks. They also provide accounts which can follow you as you move to new locations. And of course, Navy Federal Credit Union is the largest credit union, and in order to be a member of Navy Federal Credit Union, you must actually have a military affiliation, whether you're a veteran or retired military or active military. So here are some few steps on choosing the right financial institution for your needs. So one would be convenience. How easy is it for you to put money in and take out? Are the ATM machines close to where you work and live? Or would you receive most of your service via the internet? Can you make direct deposits and other electronic transfers? Another way is range of services. Even though that you may only start with a basic savings or checking account, try to look for an institution that offer a wide variety of services, but be especially mindful of online banking opportunities, which are very convenient for people who live in across the country. So you might have a bank or probably a credit union, and then you probably move to a totally different place where they don't have any branches. So again, if they have online or mobile banking, then that'll be actually very beneficial for you. So for minimum deposit requirements, some accounts can only be set up with a minimum dollar amount. If your account goes below the minimum, no interest is paid, or you might be charged with extra fees. You also want to check the withdrawal limits. Can you take money out whenever you want, or are there any penalties for doing so? You also want to check the interest. How much, if anything, is paid and when? Is it daily, monthly, quarterly, or yearly? So to compare rates offered locally to those from financial institutions around the nation, you probably want to check bankrate.com. And also check to see if they have insurance. Look for a sign that says your money is protected by the Federal Deposit Insurance Corporation, or the FDIC. And if you're trying to get to a credit union, make sure that it have insurance from the National Credit Union Administration. And lastly, check to see any service fees. So you want to actually know, like, what are these fees. By law, institutions must tell you about all applicable service charges that you will be charged. Products and services. After you select a financial institution, a bank, or credit union, the next step is to determine what products and services you will use. So, a savings account. In a savings account, you deposit your money into the credit union or bank, and it's kept safe for you, which is actually insured by the FDIC or the NCUA. That institution will also pay you a small amount of interest for keeping your money with them. You can withdraw your money at any time directly from the bank through an automated teller machine or ATM, or transfer money from one account to another in person or online, or through an app. The reserve requirement for depository institutions, which I think is a law of some sort, limits withdrawals from savings account to 6 pre-authorized transfers or withdrawals, excluding withdrawals via an ATM per month or a statement cycle of at least 4 weeks. But there's no limit to the number of deposits into the account. Violations of that regulation may result in a service charge or may result in the account being changed to a checking account. In addition, customers can plan withdrawals to avoid fees and earn interest, which contributes to more stable savings account balances on which banks can lend. A savings account linked to a checking account at the same financial institution can help avoid fees due to overdrafts and reducing banking costs. Now, a checking account works very similarly to a savings account, except you can actually write a check out to a person or business using money in the account. Personal checking accounts, as opposed to a business account, can either be individual, only one person is responsible for the account, or joint, as in more than one person is responsible for the account. And the check is a promise to pay, a guarantee that there is enough money in your checking account to cover the amount of the check. Checks are a widely accepted method of payment. They are usually convenient and safer than holding cash. A check is also a legal document. Writing a check without money at the bank to back it up is often illegal. Canceled checks provide proof of payment if there is a dispute. Now, you also have a money market account or a money market savings account, or MMA or MMSA, which is a savings account with some checking features. It's kind of like a hybrid between a savings account and a checking account. It typically comes with checks or a debit card and allows a limited number of transactions each month. Traditionally, money market accounts offer higher interest rates than regular savings account and regular checking accounts. But these days, due to the current interest rate environment, it's usually similar. And money market usually have higher minimum deposit or balance requirements than savings accounts. So compare your options before picking one. And you also have a certificate of deposit, or abbreviated as CD, which is a time deposit, a financial product commonly sold by banks, credit unions, and some investment brokerages. CDs are different from savings accounts in that the CD have a specific fixed term, often 1, 3, 6 months or 1 to 5 years, and usually have a fixed interest rate. The bank expects the CD to be held until maturity, at which time they can be withdrawn and interest paid. Unlike a savings account, CDs are insured. Like a savings account, CDs are also insured, and thus up to the local insured deposit limits virtually is risk-free. But in the month or two leading up to your CD's maturity date, the bank or credit union will notify you of your impending end date. Its communication will also include instructions on how to tell them what you want to do with your maturing funds. Typically, they will offer you 3 options. One option is to roll over the CD into a new CD at that bank. Generally, will be into a CD that most closely matches the terms of your maturing CD. For example, if you have a 15-month CD, they will likely roll your balance into a new 1-year CD. Or 2, transfer the funds into another account at that bank. Options may include savings, checking, or money market account. Or 3, withdraw the proceeds. They can be transferred to an external bank account or mailed to you via a paper check. But if you need to access the money in your CD before its maturity date, you'll generally have to pay an early withdrawal penalty, and you're probably going to lose some interest. Okay, debit, ATM, and check cards. A debit card usually looks like a credit card, but it is tied to your checking account. You can use your check card just like you would a check. Anytime you need to use your check card or debit card or ATM card, the transaction is almost immediately deducted from your checking account. When you use it for a purchase, the transaction is referred to as a POS or a point of sale transaction and will show up like that to your account statement. Some financial institutions offer a debit card combination, well, check card and a debit card combination. It will usually have a Visa or a MasterCard logo on it. This is also another way to access your checking and or savings account. So essentially, a debit card is a banking card enhanced with ATM and point of sale features so that it can be used at merchant locations. With a debit or ATM card and a PIN, which is your personal identification number, you can use an ATM to withdraw some cash, make deposits, or transfer funds between your account. A debit card is linked to an individual's checking account, allowing funds to be withdrawn at the ATM and point of sale without writing a check. Some ATMs charge a fee if you are not a member of the ATM network or are making a transaction at a remote location. Retail purchases can also be made with a debit card. Each financial institution creates an identity for its debit card to customize the product and differentiate uh, it in the market. Debit cards can also be called deposit access cards. Okay, ATM Safety. Your ATM provides a convenient method of withdrawing funds from your checking or savings account and making deposits. While you can obtain balance information on your ATM card, it's not reliable and should not be used to verify your registered balance. ATMs are very convenient to use, especially even overseas if you fly out of country. They usually provide you with a better exchange rate than changing money at other locations. These cards are great tools for money management, but if you do not manage them wisely, you can actually get into a whole lot of trouble. So you want to limit ATM to those machines that are in enclosed locations with adequate lighting. If possible, visit ATMs with a group of fans and use the machine at a very popular time. Sign the back of your card as soon as you receive it. Memorize your PIN number and do not give it to anyone else. Do not write your PIN number on your card and keep the number and not to keep the number in your wallet. Beware of people around the ATM. Do not let anyone watch you enter your PIN. And put your money away safely before exiting the ATM area. And keep track of all your ATM transactions. When you take money out of the ATM, it does come out of your account. Online banking services. Online banking has become a very regular service offered by most financial institutions, allowing you to conduct banking transactions over the internet using a personal computer or a mobile device like a cell phone or a tablet. These services can be particularly valuable to people who probably travel and move very often. Access to online services is established with your bank or credit union. They will provide you with an access or login number, help you choose the password, and show you how to access the services. Typical round-the-clock online banking services include accessing a list of all accounts and balances, transferring funds between accounts, applying for loans and credit cards, purchasing a certificate of deposit, receiving and paying bills via online bill paying services, and downloading account information directly into personal finance software. Banks and credit unions also offer credit cards. You can apply for a credit card at your bank or credit union, usually a MasterCard or a Visa card. If you qualify, the institution will give you a line of credit that you can use. Each month, you will receive a bill with a minimum monthly payment. You must pay interest charges to use the credit card if you carry a balance. Before applying for a credit card, I would recommend for you to attend a credit management class. Loans. A loan is the lending of money to a recipient, and that recipient incurs a debt and usually is liable to pay interest on that debt until it is repaid, as well as to repay the principal amount borrowed. Credit unions and banks offer a wide array of loans for personal use, for automobile purchases, for purchasing a home, which is called a mortgage, and even starting a business. Investment purchases. Most banks and credit unions also offer investment products. Unlike savings and checking accounts where your money is insured, investment purchases made at a bank or credit union are not insured. However, if you need an investment product, your credit union or bank might be an excellent place to start your search. Other products and services that banks and credit unions might offer are usually money orders, cashier checks, notary services, wire transfers, safety deposit boxes, and they even provide some educational services. This can come in the form of a brochure, a pamphlet, and booklets available at their branch offices or included in statements sometimes. It may be, courses offered at the local branches or it may be provided online. And many also offer some type of credit counseling for those who carry way too much debt. So when looking for an account, make sure that you ask yourself, is it an interest bearing account? And if it is an interest bearing account, sometimes it might be a variable interest rate, which is set at the bank's discretion, which is then set at the Federal Reserve System's discretion, and it may change at any time without notice. So, a real life example with that was I opened up a high yield savings account um, with Capital One, which is a bank, and I opened it February 2019, and at that time it was paying me a 1.70% APR. As soon as the pandemic hit, it went from 1.70% to 1.50% without warning. And then of course, all the way up until now, which has been about a year now, it's actually generating me a 0.50% interest, roughly, or maybe a 0.4% interest. Also, some checking accounts may pay interest. Interest is the cost of money. So, again, when you lend money or deposit money to an interest bearing account, you usually get your money back plus a little bit of interest. That extra money is interest, or you're compensated for lending somebody else using your money. Now, if the interest rate is variable, it means that the interest rate is set at the bank's and the Federal Reserve System's discretion and may change at any time without notice. Again, just like I said earlier, when I open up a high yield savings account in order to act for my emergency fund. Yeah, that's actually a real life example. Also, when you deposit funds into a savings account or a certificate of deposit at a bank or credit union, you're basically lending your money to the bank. The bank will then take the funds and invest elsewhere, possibly lend that money to other customers for if they want to buy a car, or in some cases, even if they want to probably start a business, or also probably to get a mortgage for the home. So in many cases, interest-bearing checking and savings accounts require a minimum daily balance in order for it to have the account to still be open. So if you go below a certain amount in a checking or savings account, you will probably be charged a fee averaging about $10 a month. But be sure to find out the minimum amount required to open and maintain the account and the associated charges. It may be more cost effective to have a non interest bearing account and to avoid the service fees. So, currently, my checking account, it is non interest bearing because I don't want to incur those fees. But my savings account, again, with my high yield savings account, um, it of course, what the name says, high yield savings, it actually do yield me much more higher interest. And of course, you also want to be mindful about the fees. So some accounts only charge a fee if you write more than a certain number of checks per month. You can order checks through your financial institution, or it may be less expensive to order them from a mail order company. If you use a source other than your financial institution, be sure you send a check reorder form to ensure that the numbers on the check are printed correctly. Of course, never write your social security number on a check, never write your credit card number or phone number on your check either. You're not required to do so by law, but if you do so, you might be subject to identity theft. Again, moving on with some more fees, the ATM fee. Some financial institutions may charge to use their own ATMs, even if you're a customer. You'll always be charged if you use another institution's ATM. And you also have your stop payment fees. When you change your mind about paying, you also have the right to stop payment on any check you write. You must make the stop payment before the check reaches the bank. Be sure to allow the bank reasonable time to carry out your request, and there's usually a charge for this service. And lastly, overdraft protection. If you write a check for more money than you have in your account, what happens? Well, you may be able to link your checking account to a savings account to protect yourself. Interest rates on overdraft services are very high, and many financial institutions will still charge a non sufficient fund fee or NSF to your account in addition to any interest charges that accrue. Financial institutions usually charge $25 to $35. Usually, it might be a little bit more. They may pay the check or to honor the debt and overdraw the account, or they may not honor it at all but will still charge you a NSF fee. And also, there's also another law that people probably don't really know about, and I didn't really know about this law until recently. It's called the Check Clearing for the 21st Century Act. This law, also known as Check 21, allows the banks to clear checks electronically instead of exchanging actual paper checks. Banks no longer must return original checks with your monthly statements or even when there is a problem with the check. So Check 21 creates substitute checks, which you can use as a legal representation of the originals. Ordinary check images, which some banks have provided for years, are not substitute checks. It has always been a good idea to get canceled checks with your monthly statement. Now you will want substitute checks each month. Banks usually take at least a day or two to process these paper checks, but electronic processing can happen almost immediately. This means you have less float time between when you write a check and when the money is taken out of your account. This could increase the chance that one of your checks will bounce due to insufficient funds. Having your employer deposit your paycheck directly into your account can help you cope with the change in float time. Quicker clearing also means less time to stop payment on a check. So, who can you complain to if you have an issue with your bank or your credit union? Now, if you have a dispute with your bank or credit union, you should handle it as you would for any consumer complaint, as in starting with your bank or your credit union. The bank actually has a chain of command for handling complaints. So banks listen to your complaints because if you move your money to another bank, well, they lose money and then they lose the customer. So you should start off with your customer service representative, and then if they can't handle it, they're going to go up to your branch manager. If it's a branch, if they can't handle it, it's going to go up to the bank president, and then if the bank president can't handle it, then the bank regulator, and then if the bank regulator can't handle it, then it's going to go up to the FDIC or the NCUA and all other agencies. Okay, managing your money online. So, of course, the internet offers the potential for safe and a convenient way to shop for financial services and conduct banking business any day, anytime. However, safe online banking involves making good choices, decisions that will help you avoid costly surprises or even scams. So one way is for you to confirm that an online bank or online credit union is actually legitimate. So whether you're selecting a traditional bank or an online bank that has no physical offices, it's quite wise to make sure that it is legitimate and your deposits are federally insured. So most bank websites will have an About Us section or something similar to that actually describes that institution. You may find a brief history of the bank, the official name and address of the bank's headquarters, and information about its insurance coverage from the FDIC or the NCUA, respectively. FDIC for a bank or NCUA for a credit union. So you want to protect yourself from fraudulent websites. Watch out for copycat websites that deliberately use a name or web address that is very similar to, but not exactly the same, that of your real financial institution. You also want to verify a bank's insurance status. So in order to do that, look for the familiar FDIC logo or the words member FDIC or FDIC insured or NCUA or anything similar to that on the website. You also want to prevent information sharing. So your bank should provide a clear method for you to opt out of information sharing, hopefully. You may have heard that some companies track your web browsing habits while at their site to understand your interests and then market out services or promotions via algorithms. You may want to ask whether your bank tracks your browsing habits if these practices is of concern to you. Also, your web browser may enable you to block the ability of outside companies to track your browsing habits. Your bank and your internet service provider may have more information about how to protect your privacy online. The internet is a public network. Therefore, it is important to learn how to safeguard your banking information, credit card numbers, social security number, and all other personal data. Look at your bank's information for information about its security practices or contact the bank directly if you have any questions. Also, learn about the advantage of security features such as encryptions and PIN numbers, or your personal identification number. You also want to keep personal information private and secure. So, banks and credit unions are required to give you a copy of their privacy policy once you become a customer, regardless of whether you're conducting business online or offline. You may also see a copy of it posted on the bank's website. Now, by reviewing this policy, you can learn what information the bank keeps about you and what information, if any, it shares with other companies. Banks may want to share information about you to help market products specific and tailored to your needs and interests. If you do not wish to participate in information sharing, however, you have the right to prevent your bank from sharing your personal private information with parties not affiliated with the bank, except in certain limited circumstances. If you move money out of your checkbook, keep your register current. When you make a transaction online, you will be given a confirmation number. Be sure to record all these numbers, the dates of each transaction, and a description of the transaction so you can match it up with your bank statement when it comes in. So you want to secure your computer and your mobile device. Use the passcode lock on your smartphone and other devices. It's going to make it more difficult for thieves to access your information if your device is lost or stolen. Log out completely when you're finished a mobile banking session. Protect your phone from viruses and malicious software or malware, just as you would do for your regular computer by installing mobile security software. Use caution when downloading apps. Apps can contain malicious software, worms, and viruses. Be aware of apps ask for unnecessary permissions. Download the updates for your phone and mobile apps. Avoid storing sensitive information like passwords or a social security number on your mobile device. Tell your financial institution immediately if you change your phone number or you lose your mobile device. Be aware of shoulder surfers. The most basic form of information theft is observation. Be aware of your surroundings, especially when you're entering in very sensitive information. Wipe out your mobile device before you donate it, sell it, or trade it using specialized software or using the manufacturer's recommended technique. Some software allow you to wipe your device remotely if it is lost or stolen. Be aware of mobile phishing. Avoid opening links and attachments in emails and texts, especially from senders you don't know. And be wary of advertisement, not from a security provider claiming that your device is infected. Report any suspected fraud to your bank immediately. Use secure wireless connections and watch out for public Wi-Fi. Public connections aren't really that secure, so try not to perform banking transactions on a public network. If need be, if you need to access your account, try disabling your Wi-Fi and switch to your network. Switch into your mobile network. Of course, you want to have your firewall protection and security protocols. And also, another thing is if you're sharing financial accounts with somebody, you will need to decide who will have the primary control of the checkbook. Now, both individuals should know how to write and record account transactions, checks, credit cards, check cards, debit cards, deposit and withdrawals, and balance the account. Again, splitting a pad of checks is not recommended due to the problem of recording the checks in a common register, which is a bad idea. Now, some couples opt for having separate accounts with each other, which each person have responsibility for different bills. Other couples might have 3 accounts, one for each person, and their individual money and bills, and a third that they both put money into and from which they pay joint household bills. And primary and secondary accounts for couples. The primary account could be used for the normal at-home expenses. The second account can set up an automated transfer to this account from the main account. And this is actually going to be especially helpful for the military, because those in the military, they deploy. And also, you want to talk to your spouse or your significant other and decide which is the best method for the two of you to manage your checking account. Now, some of the mistakes made with checking accounts can be costly, and some of these are Common reasons why you might find it difficult to balance your checkbooks, and others are flat out illegal, and you can actually be prosecuted when you do it. So you're not subtracting ATM fees or service charges. Accounts for any fees incurs and record them in your register. In addition, you must read your monthly statement to make sure it matches what you recorded in your transaction register. You also post dating checks. Well, post dating checks can be risky if you ask somebody to hold a check and then they cash it out anyways. Banks will pay the check immediately if there are sufficient funds. Otherwise, the check will be returned and result in the loss of non-sufficient funds. In return, check charges. You also splitting check paths between joint account holders. Make sure both parties involved know the status of the account. Maintain a central transaction register and use duplicate checks for ease in remembering to whom the check was written. Writing checks before the money is in the bank. This can be considered check kitting. With this, you make sure that money always is in the bank when you're writing a check. The check may clear sooner than you expect and might be returned. Kitting occurs when you have two accounts at two separate financial institutions and write checks to deposit money back and forth when you have no funds in either account, which is very risky business, and I think it's probably illegal to do so. Also, you're not balancing the checkbook. It is important to do this every month so you know what charges were incurred during the month, what deposits, withdrawals were made, and the month end balance. Um, Not recording checks written or debits made. The checkbook register is one of the most important parts of the checking account management. Accurate record keeping is vital to maintain a good account. Financial institutions can give updates over the phone if there's a question about a check. And also addition or subtraction errors if you balance your checkbook manually, followed by using a calculator. And lastly, omitting automatic deductions. If you have payments arranged on an automatic deduction, be sure to know the date the payment is deducted from your account and record it in your register. So tip: record these on the same day you record your salary. Okay, consequences. In addition to embarrassment, there are many negative results of poor checking account management and financial mismanagement in general. Consequently, range from personal to professional. You can actually get hit with hefty service charges. Mistakes are usually accompanied by fees and service charges that can leave you further um, down the financial hole. And also reported to the credit reporting agency. Bounce checks may be reported to a credit reporting agency and included on your credit report. When potential lenders or creditors look at your credit report to decide whether to loan you money or advance credit to you, they will see the bounce check report, and it will have a negative impact on their decision. Future employers also may have access to this information, and maybe future landlords too, if should you decide to rent a apartment or rent out a house. So I personally use personal banks and credit unions for my cash management. I use a checking account for my general month-to-month spending, bills, buying groceries, and recreational activities like eating out, going to the movies, and whatnot. I also have a high yield savings account, which acts for my emergency fund, which is a financial safety net for future mishaps and or unexpected expenses. And lastly, I use a certificate of deposit for short-term goal savings, um, like saving up for car maintenance, oil change, brakes, tire alignment, and all of the things that I might need in order to extend out the life of my car. I also use CDs to fund my vacation out of state, so I could go home and see my parents. And also used to buy a very expensive consumer item, like to buy a brand new cell phone, a brand new laptop, a brand new TV, instead of me actually using consumer debt to buy that consumer item. Now, the rest of my money is put into investments in order to outpace inflation and to grow my wealth beyond the typical 0.40% slow economy APR to a 2% booming economy. So I put money into my retirement plan. I put money into real estate. I put money, well, real estate being crowdfunding, crowdfunding deals. for the time being, until I have money to fund a rental property deal. If you want to know more about crowdfunding, you can actually look up Fundrise. I put money into a dividend paying stock portfolio that I created from scratch. I use mostly ETFs and REITs and probably a bond ETF. At the time of this recording, of course, later on in the future, I'm probably going to add more holdings to it, but for now, I'm just going to see how that works. Also, I have money into a robo-advisor for general growth via index funds just to take advantage of compound index and then just let it grow up. And I also use another robo-advisor for bootstrapping my business startup costs. By that, I mean I'm using my own money without having a whole lot of outside help in order to fund my business. And also, lastly, I'm actually going to talk about the brief history of black banking. Okay, again, going back to the Fremont Savings Bank. The Fremont Savings and Trust Company, also known as the Fremont Savings Bank, was a private savings bank that was chartered by the U.S. Congress on March 3rd, 1865, to collect deposits from the newly emancipated communities. Now, within 7 years of its formation, the bank opened 37 branches across 17 states and Washington, D.C., which actually collected funds from 67,000 depositors. Now, at the height of its success, the Fremont Savings Bank held assets worth more than $3.7 million in 1872 dollars, which translates to $80 million in 2021. However, the rapid development of the bank was largely driven by false claims and coupled with mismanagement and fraud. So the bank failed in 1874, and contributing factor to this was speculative loans issued by the bank's white officials throughout its existence. There is a consensus among historians that the bank's failure not only affected the savings of many African Americans, but also their trust with financial institutions. Now, against a backdrop of racist practices in the banking industry, such as denial of access to credit, black-owned banks arose to help disenfranchise black Americans. So, although the failure of the Fremont Savings Bank was a huge blow to the black community in the United States of America, a number of black-owned banks emerged in the following years. Like in 1888, the Capital Savings Bank in Washington, D.C. became the first black bank to open. And the Savings Bank of the Grand Fountain United Order of the True Reformers in Richmond, Virginia, became the first chartered black-owned bank in the United States that later opened the next year in 1889. So between 1888 to 1934, African Americans owned more than 130 banks in the United States, and the number of black banks rose from 4,000 to 50,000, as said by Alden McDonough, who was the CEO of a New Orleans-based Liberty, who was the CEO of the New Orleans-based Liberty Bank and Trust. So Maggie Lena Walker was an African American businesswoman and teacher. She was the first black woman to charter a bank and serve as its president in the United States. She chartered the St. Luke Penny Savings Bank, and she also served as the bank's first president, which earned her the recognition of being the first African American woman to charter a bank in the United States. So the St. Luke Penny Savings Bank leadership also included several female board members. Later, Walker then agreed to serve as chairman of the board of directors when the bank merged with two other Richmond banks in order to become the Consolidated Bank and Trust Company, which grew to serve generations of Richmonders or Richmond citizens as an African American owned institution. In 1905, Walker was featured alongside other African American leaders such as Mary Church Terrell, T. Thomas Fortune, and George Washington Carver in a poster titled The 101 Prominent Colored People. And currently, there are about 40 black-owned banks and credit unions in the United States now, offering services to the surrounding communities. And for a list of black-owned banks and credit unions, you can actually click a link in the description below. And that's actually a brief history on black people and their relationship with banks in the United States of America. So this is Dawson Discussions, and my name is Nathan Dawson Jr., and I will see you in the next video. Stay tuned.